The Johannesburg Stock Exchange is Africa's largest exchange by far, with the largest market cap and deepest liquidity. It was established nearly 120 years ago and listed its own platform in 2006. The JSE has a market cap of 6.3 billion rand, a price to earnings ratio of 15.3 and a dividend yield of 3%. And the great thing about the JSE is also monopoly.
Yeah, very nice.
You can't not win with a monopoly.
Yeah, the Securities Act in this country makes provision for stock exchanges, but they are really the only solution. I think there are a few OTC type exchanges, but the JSE succeeds in stamping them out. Remember, they bought SAFEX and they bought the bond exchange as well. So they really dominate our financial markets. As you said there, though, started 120 years ago between the chains in downtown Johannesburg, professionalized the business after 96 under Russell Loebscher, listed on their own exchange in 06, so they're a listed entity, and the shareholding then passed to the rights holders and to institutions. So powerful business, supply information as well as trading services, strong margins, strong cash flow, been a bit pedestrian with commercialization of trading systems in my view and settlement systems, but certainly not the worst run parastatal in the country. Sorry, parastatal, what am I saying? It's a private company.
Nikki Newton-King, I apologize profusely up front for Paul Theron, and I'm hoping Gebrand is going to redeem us right now.
Yeah, look, there's so much to say or to add to that. Certainly that's been a difficult space for them. They haven't been allocating money brilliantly over the last few years, and they certainly have been struggling on the IT side, rolling out new systems and their Millennium IT systems, etc.
But isn't that now rectified and the IT system problems are behind them?
Yeah, you could go that way, but certainly I think if you look at the growth prospects for this company, it's certainly a bit hampered at the moment. You saw revenue on the stock exchange itself, on trades, etc., declining about 9.4% in the latest sets that came out, the results. The others were growing like 2% on the bond exchange. And I think that the synergies that they were expecting from the bond exchange, shareholders certainly didn't see. And then, of course, capital allocation that has happened over the last 2-3 years were not brilliant as well.
Not a calamity on the share price by any means.
No, and I think we must just be careful here. I mean, I think it is a very well-run outfit. I think they've been careful to charge at the right level in order to ensure their profitability. I think on the trading systems, they've done well. The Millennium IT system is, world-class and it's in place. It's the settlement and back-end systems. They've got to do some more work on the derivative exchange system. The bigger picture, though, is quite tricky. We know globally that stock exchanges used to be very exciting, but have fallen out of favor a little bit because a lot of the institutions deal with each other via dark pools and bypass the exchange. So the NYSE, which used to be the titan of the global markets, doesn't even really do as much of the market share, less than 20% of US
Are you
trades.
saying we're looking at the death of exchanges as we know them down the line?
No, not look. There's a lot of derivative trade going on, but remember the South African case is very unique because of exchange control. People who want to buy SAB Miller can buy them in London or they can buy them here. They buy them wherever they like. So they only buy them here to the extent that they're permitted only in terms of rands of doing that trade here. So if we were to have a post-exchange control environment, I think the JSE could battle a little bit because some of that trade would go offshore. But again, I mean, when's exchange control going to go? All I'm saying is that where some businesses, you can say this thing is going to be flying high 10 years from now, my question mark about the JSE is where's it going to be in 10 years' time?
Can you give us a little more clarity on where you think the JSE will be in 10 years' time, Gebrand?
Yeah, look, I think Africa does bode for exciting times for them going forward. And I think they got a lot of expertise, and remember we're like first world in the financial game in South Africa. So I think that's a place where they can grow further.
So we could capitalize on that reputation you're saying into Africa.
I think that's something that they tried as well so far, something they could build on going forward. But certainly it's not an easy space. You must remember these countries and governments don't want to lose control of their exchanges as well. So that's one strategic part I think they can go into going forward. But certainly they're going to have some struggling barriers of entry in that space as well.
Talk to me about the investment case right now.
Well, it's certainly one which looks quite strong. They're very secure. They pay reasonable dividends. They've got a quality management team, lots of women in the management team, which is a big plus. I think they will continue to do well. The trouble really is I think they're going to have to defend what could be a little bit of a declining market share in relation to those economic developments I spoke about. And that then becomes a cost management challenge. I think traditionally they've been in quite a powerful position as a relative monopoly to, make whatever their costs, whatever they wanted them to be, and to make their charges whatever they wanted them to be. They also make 145 million rand a year out of data sales. In a post-Google web finance information environment, that's going to be hard to defend. So I just think there again, there's a concern that revenue streams which they currently depend on may not be there in future.
Gerbrand, anything to add, and then hot or not?
Now look, at a PE of 15 and a dividend yield of 3 and a declining in revenue and in earnings last year, certainly not hot for us.
Paul, hot or not?
Yeah, I don't want to sound like a downer, but I think, it's evenly priced at the moment, not hot for me.